Accounting. Accounting is the process of recording all the financial elements, all the financial transactions. That means incomes and expenditures related to a business organization in the books of accounts. So, accounting means the process of recording the transactions or the financial elements in the books. And the books in which the accounts are recorded is called account. So account means actually it is a book. We know that a book consists of several pages, isn't it? Each page is designated for a particular account. For example, the first page may be used to record all purchase transactions. The second page may be used to record sales transactions. In this way, for each and every item, separate pages will be used in the books. And each such page is actually called account. Look at here. Suppose this is a page. This is a page in which we are going to record transactions in which of a business organization. Then this page is actually called account. This page will be divided into two equal parts. Okay. In account book, each and every page will be divided into two equal parts. On left part and on right part. The left part is always called debit side and the right part is called credit side. Actually, we are dividing a page into two equal parts. The left hand side of that page is called debit side and the right hand side of the page is called credit side. This is the format of an account. And in accounting, usually we use the words debit and credit. Simply, debit means record the transaction on the left side and credit means record the transaction on the right side. So instead of saying left and right, in accounting time, we use the words debit and credit. Debit means we record the transaction on the left hand side of the page. And credit means we record transaction on the right hand side of the page. Okay. Actually, the procedure of accounting starts with a preparation of journal and then posting such a journal into ledger. And from ledger, prepare the trial balance and thereafter preparing the final accounts. Okay, here we discuss or start from the portions of final accounts. Okay, so what is this final account? Actually, final account is prepared only after preparing this journal, ledger and trial balance. Now we discuss from final account portion. Okay, final account means the accounts which are prepared at the end of a financial period. Usually, the financial period of every business organization is 1 year. If a business organization starts its business on 1st January, definitely it must end on 31st December of that year. Okay, usually our government accounting period is which starts from 1st April of every year and end on 31st March of next year. But a business organization has the freedom to select any year, that means any 12 months as their accounting period. But for convenience, usually almost all business organizations, especially company type of organization, use the 1st April to 31st of next year as their accounting year. That 12 months period becomes their accounting year. On the end of that period, that means if the accounts end on 31st March or end on 31st December, whatever it may be, on that date, they have to prepare some accounts which are called final accounts. Actually, this final account consists of two accounts and one statement. The first account is trading account, then profit and loss account, and thereafter we prepare a statement called balance sheet. These three items forms part of final accounts. Now we discuss how to prepare this trading account. trading account. I already told you to prepare the final account, we have to prepare trading account, then profit and loss account, and finally balance sheet. The first part of the financial statements or final account is the trading account. This trading account is prepared to find out the profit out of the manufacturing or production process. Okay, trading account is prepared to find out the profit out of manufacturing or production process, which is termed as gross profit or gross loss. Now I explain how to prepare this trading account. In order to prepare trading account, you should remember this format. This format is very essential to prepare the final account part of trading account. Okay, and I already told you that every account means a page, and it will be divided into two equal parts. Okay, on debit side, left hand side is called a debit side and the right hand side is credit side. A trading account is also an account. This account is divided here by two equal parts, a left hand side and a right hand side. Okay, two equal parts are there. This left hand side is called a debit side and this right hand side is called a credit side. Okay, there are this is actually a format, and there are some items which are to be shown on the debit side of the trading account. Now I read such items. First, in the trading account, we should write opening stock. While writing up the trading account, we have to show or start with the 2. For every item, there will be 2. I written here 2 first, and thereafter ditto. Similarly, on writing on the credit side of the account, we have to write by. Okay, and thereafter every item we show to ditto. Okay, so the first item to start a trading account is opening stock. You have to find this item from the question. In the question, sometimes it may be given as the last item, but you have to find this item first and show here to opening stock. Okay, thereafter the next item in the trading account is purchases. Purchases. While writing this purchases, sometimes there may be purchase return. So here purchases amount is shown here, and thereafter, since this format I just provided into marks here instead of amount, I make it clear more at the time of explaining a question. Okay, now listen here. Purchase is written here, the amount is here, and if there is purchase returns, that is to be deducted from the purchase. Less returns means less purchase returns. The purchase returns may sometimes called return outweighed. Return outweighed. If return outweighed or purchase return is there in your question, first write a purchase in the inner column, the inner area, and deduct this purchase return, less returns from here, and the difference is to be shown outer column, this amount. Okay. So in every trading account, the first item should be opening stock and the next item should be purchase. Okay. Thereafter, here are some items and there is no order for these items. The first item should be opening stock and the next item must be purchases, and thereafter here is direct expense, then wages. You can write wages first and then direct expense, no issue. Or you can write duty first and thereafter direct expense here. That means there is no order for other items. Other items may appear in any way, but this first two items should have an order. First should be opening stock and next must be purchases. Some items are here: direct expenses, wages, carriage inward or carriage on purchase, power and fuel, manufacturing expense, factory expense, dock and clearing charge. Dock and clearing charge means the amount spent at the time of clearing goods from the port. Okay. Duty, import duty. Then electricity, coal, water. These are the items used in a factory for production purpose, for power purpose. Okay. Then royalty. Royalty means amount paid to get the right of a manufacturing formula. Some may invent something, some items, and they may not use their knowledge to produce on commercial basis. We can purchase that right from them and use that right to produce goods. Okay. For that purpose, we have to pay some amount to that other person, which is called a royalty. Then freight. Freight means actual transportation charge. Okay. Actually, this carriage, inward and freight are more or less same in meaning. So these are the usual items considered in the debit side of the trading account. If you by hearted these items, what are the items to be debited in the trading account, then it will be easy to prepare the trading account from a question. Okay. Similarly, come to this credit side. The first item to be shown on the credit side must be sales. While writing credit side, you should show buy. Okay, buy sales. And the amount is shown here because sometimes there may be sales return. The sales return is otherwise called a return inward. Return inward. The sales return or return inward is deducted from here. Okay. Then thereafter closing stock is written. These are the items shown on the debit side, and usually only two items are there on the credit side. The first item must be sales and the next item should be closing stock. Okay. So this is a format of a trading account. After writing up this account, we balance this account. I explain through a question how to balance an account. After writing up all these items, we have to balance this account, and sometimes the balance may appear on the debit side. If it is on the debit side, we call it as gross profit. And if the balance appears on the credit side, it is called a gross loss. Okay. So this is a format of a trading account. Now we can solve a question by using this format, but I explain that in the next episode, next video. Okay. Because of the limitation of length of the video, I explain this in the next video. Okay. The video name may be ignou, MBA, mmpc5, E2. You can find the next video in that.